Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and the markets have been doing pretty darn well the last couple of days, 2 or 3 days, and I wanted to show that to you here. We crossed 300 billion in total market cap. Now, for those of you that weren't around back in the run-up of late 2017, early 2018, these markets went as high as I recall, so don't quote me, but somewhere around 800 to 850 billion. Okay. And since that time, it has gone down as low as I believe around 100 billion. I was there. You should have seen how nervous people were then. But so now we're back up to 300 billion. You can see XRP touched, I believe, 22 cents yesterday at one point. But just about everything is pretty green across the board. So let's look. And then James Rule said, does DAI's son have to draw you a picture? And he's showing where it had crossed 300 billion. That's on Coin Paprika, one of my favorite coin listing sites. And then there was this from XRP Crypto Wolf. ESPN launched an online gaming that allows cryptocurrency deposits and withdrawals. ESPN Global announced the launch of blockchain gaming platform that will allow competitors to deposit and withdraw using Bitcoin. So here's what's going to happen, folks, because some of the people that have made fun of me the most are my friends in my fantasy football league when it comes to making fun of me about digital assets. And so this, you want to talk about going mainstream, when digital assets become a part of ESPN and the whole sporting thing, get ready, because at my fantasy football draft this year, I can promise you I will be throwing this in some people's faces and saying, wait, didn't you say I was crazy for the last 5 years about all this? And now your precious ESPN is going to be using digital assets, right? Okay. Now, XRP Bart sent me this. Not this. He sent me the next thing I'm going to show, but I had to tweet this out this morning because I forgot to mention this. Brad Garlinghouse, when he tweeted out about the OCC this week, saying that banks are now going to be able to custody, they're now going to be able to custody digital assets. All of a sudden, Brad Garlinghouse made it okay to hype. In social media, you're not allowed to say words like boom in relation to digital assets because that makes you a hype person. Well, I'm always pretty hyped about the digital asset space because I'm a believer. I know that it's about to change the entire financial world. And so I have no problem being excited about what I know is coming. And but it's kind of nice to see a guy like Brad Garlinghouse come out and use some of these type words too. So I guess I haven't been so wrong all along after all. But if it was just him, it would be one thing. But wait a minute. Barry Silbert, who runs the digital currency group, who owns a part of Ripple and Coinbase, he's hyping pretty much too. He said two things yesterday. Yesterday. SPAC pitches coming my way from every direction. Methinks we're going to have some publicly traded crypto companies this year. And then he said, are you ready? Now, if that's not going to put people in a frenzy, I don't know what is. Well, my response to him was, are you ready to put XRP back on your conviction list? And I think some people didn't understand what I was talking about. Well, I'll show you what I was talking about. This is Barry Silbert replying in 2019, July 16th, 2019. Ripple, the company, is our largest investment. XRP, not on our conviction list of holdings yet. Super bullish on the company. Neutral on the token as of now. Well, then I went and found a tweet where back in 2016, October 27th, he says, I'm with you. We, Digital Currency Group, only own Bitcoin, Ripple, XRP, Ethereum Classic, and now Zcash. So I thought that it was completely appropriate to ask him, can you explain that? Explain why XRP was not on your conviction list yet in 2019, but it was in 2016. I thought that's a pretty interesting thing. I'd love to have the answer to. Now we need to go into talking about what is really. And remember, first let me tell you what we're going to talk about. Polysign. And we have to whisper that because it's the most secretive custody project in digital assets, and no one's allowed to talk about it. Now, here's what's important. Here's why we need to talk about custody today. This is the reason. Because the OCC is not going to say that it is now okay for banks to custody crypto assets unless they know it's already done. It's already a done deal. The custody is set up now. Doesn't happen. That's the reason it's such a big deal. Well, it's also not a coincidence that this week Ryan Zagone tweeted this out in reply to someone. He said, highest likelihood partnering banks will have practice with vendor review via fintechs, plus trusted partners exist. Example, Anchorage, BitGo, Polysign. So this is the reason Polysign kind of came back up this week for me. So then yesterday, James Rule, and you need to give him a follow, at RuleXRP, he had made me aware of this. Now, there was a lot of discussion about how that this may have been a mistake, and that it just means that Polysign was received payment protection money from a business loan or something from the payment protection program, but it's still interesting. On CB Insights, under there, it shows two investors, and it says undisclosed investors, and it says paycheck protection program under Polysign. Now, this is probably some kind of mistake. We don't know, but it's still interesting because we know nothing about what's going on with Polysign because it's one big secret. So anything having to do with Polysign is fun to cover. So we cover it here. But here's, for those of you who are new to this game and have not heard a lot about this, Polysign, this is a tweet I did back May of 2020. This was a Polysign job posting. And remember, it's extremely secretive. But this was an interesting part. Applicants must be authorized to work in the U.S. Security clearance will be needed. And so we covered this a few months back. And there's so many fascinating things having to do with custody and Polysign. Now, here's what you need to know. And I've talked about this a lot on this channel. What custody is, for those of you that don't know, when you buy stocks, and I think I talked about this the other day, but when you buy stocks, you don't really ever think about the actual stock certificate that shows that you own those stocks. And that's because those stock certificates are stored and handled by these traditional custody companies. And here's the biggest ones. There are no coincidences, folks. The world's largest custodians. For the 8th year in a row, BNY Mellon is the largest custodian. All right. Number 2, State Street is the number 2 custodian. And coming in at number 3 is JP Morgan. Now, Northern Trust is also one of those in the top 5 or so. They're huge too. So now let's look. It just so happens that SBI Holdings is owned. These are their top shareholders: Northern Trust, BNY Mellon, and JP Morgan. Those are three. The 3 of the largest custodians in the world are the top owners of shares in SBI Holdings, which owns 10.5% of Ripple. I went to Northern Trust's website and I found an interesting video. Now, I'm going to give my disclaimer. I may have to end up clipping this video out because they play music over it, and sometimes that causes a copyright strike, but I will cover that after you watch the video because the video is worth watching. Check this out.
The definition of a digital asset is greatly challenged within the marketplace and industry, and not easy always to grab hold of. A digital asset is any asset, whether tangible or intangible, that can be captured electronically and transferred between counterparts. There are a significant number of digital assets, but we like to look at things in 3 categories: tokenized assets, digitally native issued assets, and digital cash. A tokenized asset is a traditionally issued asset that is converted at a later date into a token. A token could represent a share in a company, an allocation of units in a bond or a fund, or it could be something more esoteric like a race car or art, where we're tokenizing the traditional asset in that form. By tokenizing an asset, we're not changing the asset itself. It keeps its original form. We're just changing how that asset is held and digitally transferred in terms of value and workflow. This is seen as a key step in terms of digitalization of our marketplaces, where current legislation and legal agreements require certain assets to be issued in certain ways, but then the benefits of electronic markets can be applied to them further downstream. A natively issued digital asset is where the legal form of the asset is issued directly into a digital ecosystem or environment. For this to happen, both the legal and regulatory framework has to recognise the asset in its digital issued state. We're also starting to see a significant amount of exchanges producing capabilities for both private placement and digital asset issuance. This is happening across Europe, Switzerland, Germany, for example, but also in the US and Asia. As digital marketplaces and ecosystems evolve, one critical element in the future will be digital cash. Digital cash is required to create settlement within these infrastructures and really truly get the benefit out of a digital environment. Digital assets bring significant benefits to both the end investor and any participant within the value chain. The asset itself will be transferable immutably between counterparts, improving trust and liquidity within market segments. They also provide significant efficiency within the marketplace themselves as well, where there will be minimal reconciliation points between counterparties. Although there's a lot to do with both the technology, the regulatory and legal structures, the upside is huge, and we are really excited at Northern Trust about the opportunities digital assets and digital markets will bring over the next few years.
You better believe it's huge. All right. So, by the way, if I have to clip that video, I just played a video, and if I end up having to clip it, you can go to northerntrust.com/innovation if you want to watch this video. So, moving along. So what do we have? Polysign is this standard custody and trust company is a subsidiary of Polysign, right? And then this is Polysign. Tim Keeney, he's ex-BNY Mellon guy. And there's also another guy that's on the documents that we've seen before. These guys are on the documents for standard custody, as I recall. Now, let's go. Here's a clip there's a few clips in here that I wanted to show you. But first I want to tell you who's on this stage. All right. What you have on the stage is you've got some of these guys that are from these new fintech companies that do custody, like Anchorage. You got the guy from BitGo. But the important guys you have on the stage is you've got a guy from State Street and you got one from BNY Mellon. The guy to the very far right of the stage is the BNY Mellon, and then the guy to the left of him is the State Street guy. Listen to what they say in this video.
If you can describe, well, first of all, say the company that you're with just to make sure that the audience knows, and then in one sentence, describe your crypto custody solution.
So Frank Fehrenbach, I'm at Bank of New York Mellon. Our crypto custody solution, we don't have a public offering to custody cryptocurrencies.
Next.
Jay Biancamano, State Street. Our non-existent custody solution is theoretical.
Next.
Now, this was back in 2019, okay? All of these traditional, that's what I want you to get out of that clip. All these traditional custody companies, they're not saying anything. And just so happens that neither is Polysign. They're all closed-lipped about it, okay? Now I'm going to play you a pretty long clip. It's over 6 minutes, but you really get a feel for how these guys are uncomfortable about even being on the stage. But when everybody's being quiet, you know they got something cooking.
Backstory. The back custody product that was announced yesterday, does that impact your work with them?
Sure. Well, let me talk a little bit about that. But I think it's funny you have BNY Mellon and State Street up here, and we obviously haven't gone public with a big cryptocurrency custodian platform. But safe to say we look at it pretty heavily. I think you want me to play a little bit of the counter up here, obviously for a variety of reasons. I'll say that I'm a crypto enthusiast, right? We spend a lot of time in the digital asset space, but I'm going to take a lot of the counterpoints to the folks on the stage here, make it a little fun, right? So a lot of the things that have been said about custody so far and what actually is custody and what is the definition of custody, and a lot of the things that we think about internally at BNY is what are we trying to solve? What is the problem in the market? And when you look at, let's say,
Who
Bitcoin,
says that all the time?
It's close to 4 years old, and you've seen a lot of volatility.
The problem we're trying to solve.
I'm sure several in the room a few years ago said, it's going to 1 million or it's going to 100,000, and it's 8,000, right? And it's surely an asset class.
Brad Garlinghouse says that all the time, by the way.
We as the largest global custodian on planet Earth, we have 34 trillion of assets under custody. 1 out of every $4 in assets is custody to BNY Mellon. You probably don't even know, but the brokerages and the banks all custody their assets with us. And what does that mean? I mean, we control the ledger, right? We make sure the sanctity and safety of our assets are secure. So we have all sorts of clients coming into us, from private wealth clients and institutional, like, hey, can you custody Bitcoin or whatever cryptocurrency it is? And our response is, well, where is it custodied now? Probably with one of the folks on stage. And why do you need us, right? If it's already being custodied, why do you need BNY? So you have some institutional responses like Bakkt, where you have a major exchange, New York Stock Exchange, ICE, coming in and saying and getting a license to trade in the futures market, and they need an institutional custodian. So we're operating as the basically resilience. It's not even the first order, but it is a step in the market in a cold storage capacity. Both State Street and BNY have invested in a company called Finality, which is utility settlement coin. So this is the market, and there are 14 other banks in NASDAQ.
14 originally,
that are invested, a consortium bid, and this is really to tokenize the dollar, tokenize the euro, tokenize the yen, the Canadian dollar, and the GBP. And so, we're investing in the space and, looking, again, at where the cryptocurrencies are trading and the problems they're trying to solve versus what's in the market, right? You're all using dollars, right? You're all trading dollars. There are some settlement time inefficiencies, surely there are in the market, and we've made a lot of progress. But what can we do as the custodian and our position too in BNY Mellon and the treasury market and the repo market and downstream, so to speak, to make that more efficient.
So Frank,
the existing infrastructure.
Just because the news guy in me just has to peg it to something that just happened yesterday. So can you just update us on where BNY Mellon is with Bakkt as of?
I don't want to oversell that solution, right? I mean, we are a third order cold storage, again, saying everything that's public out there in terms of what we're doing with Bakkt to provide a backup custodian solution.
And that's still ongoing?
Sure.
Okay. Would you describe the service as sort of white label? The BNY Mellon was noticeably absent from a lot of the articles that covered the Bakkt story.
Yeah, well, I mean, again, we're not at the first order. This is not a launch of a product, right, for us. We're not going out to the market and saying we now have a custody solution. So what I've talked about in terms of investment in Finality or what we're doing with Bakkt, or there are other use cases that we've mentioned in certainly in blockchain, right? But I don't think I don't want to oversell this as like this is BNY Mellon's entrance into the crypto custody market, right?
And Jay, I saw you sort of fidgeting when we were
this
talking
guy's from
about
State Street that's about to talk.
Assets under management over there. State Street's nothing to shake a stick at, doing pretty well. Can you just, why are you up here if you're not custodying?
Why am I up here? No, we are heavily invested in this technology, right? We're a DLT shop, we're a hyperledger shop. We don't really focus on the crypto Bitcoin space. 2 years ago, that's what everyone was thinking about. We're really interested in the digital asset space, right? Traditional assets that become digitized, and that's really what we're thinking about. Now, that being said, we kind of have the same philosophy as BNY, and I think we're 33 trillion, so we're not that far.
Very close.
Depending on the market.
Right.
Today.
What they've just told you, this State Street guy is both of these two companies, State Street and BNY Mellon, basically control half the money in the world, is what they're saying, in terms of custody. All right.
But, and we talk to all our peers on the street, and we talk to a lot of startups. And one of the things I think you have to understand is, I think Pete said, custody is boring. It is boring.
I also don't want to forget to mention another thing. Polysign on their website, here, I'll show you. Polysign, let's go see if we can find it. And I don't think it says it anymore. But it used to say on their website, designed to scale to the trillions. And both of these guys just told you, I think roughly between the two of them, they custody around $70 trillion. So there's a reason Polysign might want to scale to the trillions.
It's boring because it should be not even thought of in the whole capital market infrastructure. Our clients really shouldn't care about custody because institutional clients have to hire a custodial bank to protect and safekeep their assets, and we work with DTC. And to them, it should be completely transparent.
DTC.
Now, look at the other side of the coin. Look how manual and draconian crypto assets are right now. So the technology really hasn't caught up to what institutions need. And institutions need a completely transparent, seamless way of investing in these. And having to wait 2 days or giving me a gun to protect the assets is not really how it's going to work. So I think one of the reasons we are very interested in the crypto market, and we're looking at a number of use cases, is the way Bitcoin trades and the way Bitcoin is going to evolve is the same way any other asset is going to evolve, right? Trading on a blockchain. So that to us is exciting. And we think, that is a market that's going to, right now is burgeoning. I think, you have a lot of, I wouldn't say use cases, but a lot of like nascent investments in real estate, tokenized real estate. And, our clients are heavily interested in Bitcoin, but they're also very interested in, what does it mean for a bond trade on a blockchain, an equity trade on a blockchain. And that to us is the exciting piece, because when you do have 34 trillion in assets, and those assets are, safe kept at DTC, and you're servicing those assets, what happens when they're digitized? Well, you have to be prepared for that inevitability.
So I'm trying.
All right. So there's one other clip in this one that I wanted to show to you, but I think that's pretty fascinating what these guys have going, how quiet they are right now. Pretty much that's the writing on the wall. They know how big this is. Now listen to this part.
You're sitting on the sideline here, but very involved. There's definitely some services being provided, though not custodian services. And studying, I'm imagining. When you look at the companies represented by the gentleman to your right here, what are you learning from them? What's going on in the boardrooms at your companies, and what are you waiting for or looking for?
Yep. You want me to start? Yeah.
Sure.
So first, couple things. We too spend a lot of time on the digital asset side, right? So we're obviously talking about currencies today, but similarly in the credit markets and the equity markets, spending a lot of time and testing a variety of distributed ledger technologies. And again, because of the dematerialization, this is very important to this audience. I mean, it's already ones and zeros, right? It's not that there's somebody downstairs, right, counting stocks. I mean, it's already digitally moving. Mm-hmm. This is a very important point for the market that I don't think gets enough time. We haven't talked about it too much. I don't believe this is a technology problem. Like people talk about better technology. The technology is not the issue here. Let me ask you a couple of quick questions in the election season. How many of you think that the G-SIFI banks, the two of us, but JP Morgan and B of A, how many of you think they should be less regulated? Okay, a handful, right? But a very, very small minority, right? Think that the big banks should have less regulation around them. Let's talk about what's on the table. This is your money. This is your future, your house, your retirement when we talk about custody and the safety and sanctity of that money. And so, people ask me all the time about the SEC and what are they going to allow. I said the SEC is there for the protection of the investor, right? They're not out to harm you. They're out to help you, right? So when a company like WeWork tries to go public and there's a lot of private money in there, all of a sudden they have to open up their books and there's a lot more due diligence. Again, for a company to go public, there's a lot of disclosures. Anything that happens, they have to file immediately on the Edgar site, right? Again, to protect the investor. And so when you ask yourself, like, what does that mean, custody, and the regulation that we live
Who's
behind.
been working
right?
on
So
regulation
go open a
since
bank account,
2012?
it's not like onboarding at Facebook.
More than
right?
anybody else
Filling out
who's
a quick
been
form
focused
and
on
you're
regulation.
When you want to be onboarded at a bank, there is a lot of due diligence that goes on behind the scene. Credit checks and checks of who you are, right, in terms of what's called anti-money laundering and know your client. When we think about our technology infrastructure of what that means and what the Fed looks at us to have resiliency and backup disaster recoveries, minimum 80 miles apart, and what that looks like the technology world doesn't operate under those rules.
So we're running out of time. I want to interrupt.
I take a little bit of exception
to
that. I'm sorry.
You can see here.
Yeah.
Watch this. The guy, I can't remember. I think the guy speaking is the one from BitGo. I'm pretty sure. He takes issue with these guys. Basically, you can sense a little bit of tension here. Watch this.
Yeah, go ahead.
We put a ton of energy into AML KYC. Why? Because we're personally liable. The people that sign the contracts are personally liable. Unlike a big bank, I spent 20 years in traditional finance. I know the difference. We put a ton of time and energy into that. Second, we want regulation. We want to be regulated. I'll say it out loud. We want the clarity of regulation. Please, SEC or CFTC or whoever is the appropriate regulator in the U.S., lead this. Don't allow some other jurisdiction somewhere else in the world to lead this.
Yeah. So
there's a big lesson that you just saw, especially you young people out there. This is the power right here. These are a bunch of little guys that are trying to make their way. This is the power. And the power, people that are powerful and the people that have all the money, they don't give it up too easily. And that's why from day one, I was always looking at the Bitcoin thing, these guys that were saying down with the banks and all this business and how naive that is. There's always going to be the powerful, folks. It's just the way life works. And these guys are the ones that are secretive and not saying much. And you, at the very end there, you could catch a little bit of resentment out of these newcomers. And these guys, if you had to put your money where, who are the ones that the SEC are going to be listening to and all these different government agencies, who do you think it's going to be? Is it going to be these guys, or is it going to be the guys that control half the money in the world? I've got my bets down. So anyway, the point is that the correct side is the side of regulation. It always has been. That's why Ripple's always been the one. XRP's always been the one, because they did it right from the beginning. Now, this guy right here, I want to bring your attention to something. He is the one with State Street. This one right here. J. Biancamano, I guess is how you'd say that. Well, let me give Kevin Cage some credit here. Follow him on Twitter. He's at Kevin_Cage_, and he's got a really good YouTube channel as well. And you'll be blown away by his radio voice. You can subscribe to him. He's Kevin Cage on YouTube if you want to subscribe to him. And I think I saw this. He must have started a new channel as well. So it's Kevin Cage Uncaged, and you can subscribe to that as well. But anyway, I saw this clip from his posting. But it says State Street. I'll just let you listen to the clip. It's a short clip, but it's the same guy that you just saw here. It's this guy, and he's in this clip. And the show that he's sitting on, he's sitting in the same seat that Brad Garlinghouse sat on when he was also interviewed by these two people. And Barry Silbert also sat in the same seat and was interviewed by these two people. This is a Fortune magazine YouTube show right here. Listen to what he says. Close.
We're not focused really on the cryptocurrencies, the Bitcoin, the Litecoins that are in vogue right now. We're really forward-facing, and we're thinking about, what does the future hold for assets as a whole. We're one of the largest global custodian banks. So we hold over 30 trillion of the world's assets, over 10% of the world's assets, and all those are in electronic or other traditional forms. We service these assets. We're able to provide services around these assets for our customers. So as digital assets start to gain a foothold in the asset management industry, we need to be prepared of what that means for State Street and how we can service those assets for our clients.
When is that going to happen?
That's a great question. So if you think about where we are right now, everybody knows about Bitcoin, right? We talk about Bitcoin, and I use the B word. Really, we're thinking about, what is a stock in digital form? What is a bond in digital form? And there's a lot of proof of concepts out there that are going on looking to digitize certain assets. What we're really starting to see right now is it's gaining traction in the illiquid assets, so real estate. There have been a number of digital issuances of real estate. You could talk about gold. There's a digital form of gold. People are talking about intellectual properties, paintings, other things like CryptoKitties, right? People have heard of CryptoKitties. So we're seeing assets start to become digitized, trickle, 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 and then we believe there'll be a flood.
How about them apples, folks? Trickle, 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 and then we believe there'll be a flood. Well, I think that Barry Silbert and Brad Garlinghouse got rid of the tweet. I think Barry Silbert and Brad Garlinghouse think the same thing. I'm going to finish this by saying, stop being afraid of what could go wrong and start being positive about what could go right. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family to stop being afraid of what could go wrong and start being positive about what could go right. Thanks for listening.